All right, good morning, everybody. It is Tuesday, February 8th, 2022. Been somewhat of a quiet time in the market here as of yesterday. Things have really started to peter out. We've got kind of a constriction in our volatility. And so just to look at yesterday, from this 10-minute perspective, the market opened for us here right about where right around where my cursor is, and as you can see, it just kind of chopped up and down in a fairly tight range all day. Kind of a few times made it look like they might start breaking out to the upside. A few times made it look like they were going to break out to the downside, and then kept bringing it right back to the middle of the range there. So quite disgusting stuff. Despite that, I think we actually did get some decent trade calls in. In fact, I think the first trade call of the morning was right off of the back end of the VWAP. I think right now that was right off the back end of our eye level over here. So right after the open, came right into the eye level. We went. I told you that was probably going to be the case, so we'd hold there and come down at least into the VWAP, if not lower, and that really was kind of the best trade of the morning. And then just back and forth chop all. So nothing too sexy. Some decent kind of scalp trades off the middle of the range there. And that's kind of what brings us into this morning, and nothing really has changed. It seems to be trending a little bit lower here. So as you can see, yesterday's low of the overnight session was tested about midday there. They got, again, it looked like they were going to sell off, found support off the low end of the range, and then looked like they were going to potentially break out to the upside. And then they brought it right back to the bottom. They bounced again right off of that eye level in that area, but then at the end of the day there, actually we'd have to scroll back to see the actual came up to the previous daily low and then failed to make a lower low for the day. And that brings us into now. And as you can see, we're now chopping up and down at the lower end of yesterday's range. So, um, I don't know. We'll have to take a look here and see if anything in the charts is giving us an indication as to what way this might break, either up or down. So let's go ahead. We'll jump up. We'll take a look at the ultra high and come on down. Now, quarterly and monthly, I don't think there's really much to add here. We just talked about it. Weekly, same thing. So really nothing to add. If you want to see more detail on the higher time frames, just go to our Monday video. I actually have to upload that. I got caught up with some stuff yesterday and didn't get a chance, so we'll get that up as soon as possible. So look to Monday's video if you want to go into a little bit more detail onto what the higher time frames are saying. And then down on the daily here, getting towards our intraday time period here. Again, we talked about the bearish stuff yesterday on Monday's release and the pullback from there, and then the fact that we held the 38% retracement almost to the tick here of this push up from the lows of what was it now, 2 weeks ago or last week, the lows of last week all the way up to the high we made. So holding 38 from the upside and then holding the 61.8 from the downside. So we're holding the 61.8 retrace of the push down, which is a bearish clue, but now we're holding the 38% retrace of the bullish push back up, which is a bullish clue. Okay, and we actually see this kind of stuff pretty often. The ratios work out really nicely. We get holds on either sides, and then we're basically just sitting here waiting to see who's going to win out on either side. This morning, from the daily perspective, really not much to add compared to yesterday's pre-market. We've got the bearish divergence from the expected resistance area with all the confluence there, and we don't really have any type of bullish divergence on the pullback just yet on this daily chart. Remember, you don't need to have a bullish divergence on the daily in order for there to be a move. But typically, if you look to previous major turns in the market, you'll typically see a decent bullish divergence there on the daily. So don't quite see it just yet. And from a candlestick perspective here, we said this looked like maybe a potential reversal, especially right off the 38 there. But then, as you can see, for 2 days now, at least a day and a half, we're kind of just chopping within that range. And no sign as to which way we're going to go here. So let's go over to the 4 hour and just see off of the lows here of the chop area that we're in right now, if there's anything giving us clear indications. What I can tell you is from the 4 hour perspective, outside of the bearish divergence from the highs that we just talked about on the daily, we have actually a lot more bullish divergences every time the market tries to pull back than we do have bearish divergences in off the highs in this general chop area. I don't want to read too much into it just looking at that one time frame. Again, the daily doesn't really have anything there, and we'll have to go down to shorter time frames. But that's what I'm noticing here on the 4 hour. There might actually be a little bearish divergence right off those highs there. So I have to add that in. But overall, a little bit more weight on that bullish side. Let's take a look. Well, actually, before we go down to the shorter time frames, let's talk about the bigger perspective here. Now, we've already established all the information on these boxes, on retracements and stuff. So this morning, it's basically the same as yesterday. We're stuck within Friday's range. And basically, we need to break out to the upside, get through that 45.30 area. Then that will open up a retest of the highs we made just a few days ago. If they do get through there, we already talked about this yesterday. There's this major swing low here, just about 4,600. That might be trouble even if they peak above the highs from a few days ago. That might be trouble, and they could just peak right into that and get some type of rejection. And then anything further than that is going to bring us all the way up to the next block there, around 46.70. And like I said, there's a lot of rejection and failure in the market right there, and multiple attempts to get through. Nice support on the back end over there. So again, coming up back into that area, we could find some more sellers again. So that's that up above. Below us, again, same thing as yesterday. The 50% retrace brings us right back to this area that I would argue probably has some demand right there. A lot of buyers that ripped the market higher from there. So potential for some type of reaction there. And then again, a little bit deeper brings us to the 61.8, brings us to that previous resistance point, and brings us right to that bifurcation of the larger chop block right here. So that is sexy. And then I did say yesterday, if we could pull back basically within that day, within yesterday, we would come right to the back end of that trend line as well. Now that the market is continuing to kind of trek forward here, we're not going to get that beautiful alignment down there. So I was kind of hoping we would get that sell off right into there and then the bounce, because it's such a sexy setup. But so far that hasn't happened, and that doesn't mean we're not going to find support here. I just thought it would have been really sexy to see that line up perfectly with the zone. So that probably not going to work out now, but again, that level is still 100% valid. In fact, I'm really interested in trying, or at least expecting, some type of bounce from there if the market comes down. So again, anything's possible. That's just one scenario that I'm expecting. So 4 hour, that gives us the larger perspective here. If we really start ripping higher and we get through this area, we'll start looking a little bit more in depth at some of the stuff above us, but it's pretty straightforward here. And then below us, again, if they get through that 61.8, maybe there is a lot of chop within there, so maybe they find some support maybe in the middle or something, but we'll worry about it. Like I said, if we sell off and we come down another, say, 50, 100 points and break through that zone right there, then we'll reevaluate and look at what we have below us to start looking at. So let's go down. We'll start looking at the intraday time frames. Our daily, our 60-minute here. As you can see, there are so many bullish and bearish. Basically, every low has a bullish argument. Every high has a bearish argument from a divergence perspective. And so the 60-minute, there's nothing to rely on here. There's just an abundance of signals on either side. So not necessarily getting the same picture that I said we kind of see on the 4 hour, with the more bullish stuff off the lows and only one bearish signal off the highs. We get down to the 60 and it's just a smorgasbord of signals. And you can see how tight that daily range is There's the red and the green lines. That's the range there. Just about 50 points. And then there's 50% of the day. And we basically chopped around even yesterday, right around the 50% of Friday's price action, and it's basically kind of reversion to the mean all morning there. Kind of gets away from it and then snaps back, comes below it, snaps back. And so this morning, chopping around in this area wouldn't be surprising, just from the price action we're seeing this week. So the 60-minute does not give us any confluence with that potential scenario I told you about. So we're going to go ahead and ignore that. I don't think there's enough stuff, especially like I said, because the daily not showing anything there, and the 60-minute also is just a clusterfuck, right? Excuse my language, but so outside of what we talked about on the 4 hour, what we have here on the hourly is all the major eye levels. So again, we have the general retracement areas. Remember down here around 43.55 to 60, and our eye level happens to be that 61. We've got the 50% retrace being pretty much exactly the eye level at 98. And then the 38 retrace, which was already tested, that's where I said we have the bounce from there, which looked kind of bullish there back when we launched right off of it. We got that right there as well, and our 45.50 kind of delineating that. Now there's one other level in between, so if we break through the 38 and get through the lows from when we found support, remember off the previous weekly highs, we have 15 in the way before we do get to that 50 retrace. So that'll be important. Then if we do break through that critical level I told you, that 61.8 retrace of this whole leg, we're now opening up into some of these other eye levels below us. And then of course on the short time frames, there are a few levels that are probably interspersed in between here. But just keep in mind, once we get through basically the 50% retrace here, we're back into a fairly choppy sideways area, kind of like what we're stuck in right now. What else can we say? I think that's basically it from the 60-minute here. All these levels, like we know, hold almost to the tick, if not to the tick in so many instances, that we're going to want to be aware of these. So we've got this stuff below us. Our retracements are lining up perfectly with our levels. And now it's just a question as to who's going to win out on the break here. Are we going to break through the lows here around 44.38, or are we going to break through that 45.78, 75 area and start attempting again to push up into some of the other areas we talked about above us? So that's basically it. We can go down to our short time frames, and to the intermediate time frames, I should say, and look at the charts, but there's really nothing to add to the picture. We're still within everything that we were within yesterday, so all the levels are exactly the same. There is nothing new. There's no new data on the chart giving us a clearer indication of which way we're going to break. And so it's really just kind of up in the air. And just like yesterday, it might be a similar market where you don't really want to be trading too heavy. Just take it light. Remember these sideways, really tight, choppy ranges, even though we're going to see them maybe 40 or 50% of the time or whatever it's going to be, we can wait for those days when there's a little bit more action and maybe a wider range. It's kind of funny I'm saying that because I don't know, I don't even know as far as years go, but maybe just a year or two ago, having a 50, 60 point range and chopping up 60 points and down 60 points, it would have been great, compared to some of the ranges we've dealt with in the past. But it's still nonetheless fairly ambivalent. It's hard to get yourself into a nice trend and get a nice move on a trade, because by the time it starts going in your favor and you're now 10, 12, 13 points in favor, bam, it whips back, comes right back to your entry, and then goes 15 points the opposite direction, starts getting you in that way, and then whips right back again. So it makes it tough to really kind of get some bigger moves. But nonetheless, plenty of trading opportunities in here. If you dial down to the short time frames, we've got beautiful action right off our levels, right off our moving averages, still have nice divergences and trade setups. So there's still stuff you can get in, still stuff you can scalp, but just be careful in these kind of market conditions. The last thing you want to do is chop yourself up, and then for the next few days we could be in low volatility and fairly sideways, and you don't really have a lot of opportunity to really get yourself into a really nice position. So just keep that in mind, and I think that's really it. We can keep these fairly short when we're not spending 20 minutes looking at the weekly and the monthly. So that's pretty much it for this morning, guys. Good luck out there. If I had the option, which we all do as day traders, I probably would be chilling out today and not getting too frisky. So have a great one. We'll see you tomorrow.